Hey, students of iMarkets Live. The following Crypto Academy video is designed to help you understand different chart types that are available. Trading can contain substantial risk. By watching this video, you agree to the full terms of this disclaimer and accept full responsibility for your investments. This lesson will focus on answering the following questions. Before we continue, pause the video, read through them, and be certain to minimize any distractions. When you're looking at a chart and doing technical analysis, of course, we have the traditional candlesticks, which are going to print over a specific duration of time, and it's going to show you the open, high, low, and current price of the candlestick that is printing at this moment. And it's also going to show you the close price for candles that have already happened. Traditional candlesticks are similar to a bar chart. The only difference is the visual display. If you come and look at a line chart, it's also going to show you the same information, just in a different way. There are other options available to us, and some of the more powerful ones include Heikin-Ashi and Renko. Heikin-Ashi candles. They are like the traditional candlestick, but they use the open and close price from the previous candle, depending on the time frame, to combine that with the current price action, effectively filtering out some noise and giving us a better look at the overall trend direction. When we look at Heikin-Ashi, often it's going to look as if the candlesticks are going up or down slopes. And when the trend has started, there's going to be very little wicks opposite of the direction that price is heading in. Now, when we come over and we look at something like a Renko chart, Renko charts only measure the price movement. Elements that are more traditional, like time or volume, are simply not present. If we come down into the hourly time frame, essentially what this is showing us is that every time price moves $38 or 38 pips, we're going to get a new bar that prints. It doesn't matter how much time it takes. So we can see that this specific candlestick and the candlestick just before it, it took 3 hours for price to move 38 pips to the downside, effectively creating the new candlestick. When we come back and we look at this candle, as well as the bar right before it, we can see that both of those occurred in the same hour. The one before that, however, opened 5 hours prior to these ones. This is a very powerful chart type if you're looking to focus specifically on the trend. And you're also able to look at different time frames to help see different ranges of how much price has to move to get a new candlestick. On the 4-hour time frame, what this number is saying is that every time price moves $100 or 100 pips in the same direction, we're going to get a new candlestick that prints. If we come onto the daily chart, we're looking at more data, and every time that price moves 371 pips in the same direction, we're going to get a new candlestick that prints. So as we can see, the current candlestick that is printing, it opened at $7,799.40. The low of $7,428. This candlestick has been printing for several days simply because it has not been able to successfully move 371 pips in the same direction. So all of the stuff that's happening, when we look at the day to day, we can see that price is still moving, but it hasn't been able to successfully move in the same direction to create a new candlestick for us to look at. If you're using Renko charts to help identify areas of support and resistance, you can implement these levels onto your chart, and you're going to be able to go back onto your candlestick chart and compare the data to see how exactly it lines up. There's one other chart type that we're going to take a look at, and that is the range chart. Now, on a one range, we're literally looking at the smallest of movements. With Ethereum, every time that price moves 1 cent, we're going to see a new bar get created. If we come into the 10 range, every time that price moves 10 cents, we're going to see a new bar get created. If we come over and look at the 100 range, this is where the information gets a little bit clearer. Every time that price moves a dollar from the high to the low, we're going to see a new bar get created. So in this example, price has moved 10 pips from high to low to give us that new bar. If we come over to the 1,000 range, this is going to be the equivalent of when price moves from high to low, $10, which is 100 pips. So this chart type focuses on purely price action. It does not take into consideration how much time it took for that movement to happen. Although, if you look at the bottom, it is going to give you a timestamp on when the last bar closed and when the current one had started printing. These different chart types are very powerful, and it's in your best interest to practice implementation if you believe that these chart types would be effective for your trading strategy. In summary, Renko charts show price action without considering the specifics of time or volume. It's very powerful for us to identify areas of support and resistance on this particular chart type, and then go ahead and compare it with our normal candlesticks. Whereas the Heiken Ashi candles look closer at the trend and help make charts easier to read because it effectively filters out some of the noise that's happening. There are other chart types available, and each has its own unique purpose. At the end of the day, it comes back to personal preference and how much practice you have looking at that specific chart type in the moment where you're looking for a trade to set up or be confirmed for execution. Be sure to leverage the resources made available to you, and the most important thing is to stay plugged in. As you implement the information, ask questions and remain open minded, because all trading requires is persistence, discipline, and acceptance that you can and will learn this skill set.